it's already 6th of Bitcoin meetups here in Riga, and so those who don't know me, my name is Riga. I saw familiar faces from me, so probably everybody knows me. So today's agenda is personal introduction, because some faces are new here. Probably you would like to introduce yourself to other crowd and tell about a couple of words of yourself. So today's speakers are first Jamie, and he will talk about Bitcoin indexing. He's working in an interesting startup project as far as I know. So he will tell a little bit about technical stuff in this case, presentation with some samples and so on. And second speaker is very practical, because Artyom is running first and only Bitcoin cafe here in Riga. Yeah. So he will just share experience about how it was to set up Bitcoin payment system, and how it's dealing with the state revenue services after 1 month of operation, so and all kind of interesting stuff. And then we have an announcement part, so everybody could announce something related to the topic, and then summary. So probably could we very briefly go around and say who am I, what I'm doing, and what my Bitcoin experience for other one. So probably we could start from this.
Yeah, my name is Igor. Well, I'm Bitcoin miner, sort of, I'd say medium size, and well, I just use them, try to use them more and more, and lately I find ways to use them. So basically, I'm more a user than a miner now. Thank you.
So what do you?
My name is Krišjānis. I'm working in software development company, and I'm just passionate about this new technology. And
You're a user or miner or?
Tried mining, didn't work. But yeah, I just trying to understand this technology, and I have bought some bitcoins and made some donations to many people. But that's probably all that I've ever done. Haven't used it for real purchase.
Right. So,
I work at a bank. I'm a Bitcoin enthusiast. I'm interested in how Bitcoin fits in the legal framework here in Latvia, globally, in financial regulations, in taxes. So I look forward how Bitcoin will start working in Latvia.
which one?
End-to-end.
Okay. Short introduction.
I'm Jamie Steiner, and I'm presenting today what I'm doing, which is creating a Bitcoin derivatives exchange. And my experience is mainly as a developer.
My name is Jacobs, and I'm interested in Bitcoin for my bachelor thesis. I have been following Bitcoin for like a year and a half, and really interested in, and wanted to meet some people in Latvia who are also interested in it.
In what university you're
University of Riga.
Oh, okay. Right. It's not very academical, so it's topic. So you're writing in a business side or technical side?
I'm interested more in the technical side.
My name is Kristaps. I'm software developer myself also, but about Bitcoin I'm just interested in this technology and try to use it also. I have bought and sell some Bitcoins, and last week I donated some Bitcoins to Wikipedia.
Right.
But, I'm looking forward to go to Spot Cafe and drink some beer.
you could do something, of course.
Anytime.
And how do you earn Bitcoins? You mine them or?
I tried to mine, but I have earned some little bit by earning some altcoins, but it's not working.
Okay.
It is actually.
Well, yeah, if you have expensive hardware and stuff, but I have only a lot of CPU power, and nowadays you can't mine any significant amounts of anything with them.
Okay.
Hello everyone, I'm Artyom. I'm running a bar, Spot Cafe in Riga, so we are first bar in Latvia who accepting Bitcoin.
Yeah, that's quite
So
remarkable.
also quite user, but from business perspective. So I'm accepting Bitcoin and selling straight away to Coinbase.
And we'll talk about this a little bit later.
Okay.
What about you?
Hi, I'm Yanis. I also work in a bank. I'm a business developer in a bank, and I am interested in cryptocurrencies and will they or how they integrate with the real economy. So yeah, to do some presentations inside the bank. So that's why I'm here as well.
Okay, yeah.
To gather the information.
Quite interesting topic, how Bitcoin.
And not there.
It's quite interesting topic how Bitcoin is going to integrate in the existing banking system, because I think that there's no different way how to do it, because it's still emerging, this technology, and it should be somehow accepted by existing banking system and integrate together. I don't know. So, okay, so I skipped some interesting events I prepared for you. Probably somebody is don't know, somebody knows about them, some not. So we are growing a little bit further, this Meetup ecosystem here in Latvia. And since I'm representing the Riga University Foundation, which is organizing the already Meetup network, so we get 8 meetups already. So this is a meetup list for December. So first one we had a 3D printing workshop. So those are monthly meetups, so they're recurring every month. So January and February, it's already also the dates are known. So you could check out the whole calendar is rhtu.edu.lv. And today is Bitcoin meetup. Next one will be biotechnology kickoff meeting with meetup group. This is first time we're trying something to do. And all kind of those meetups is happening here in the mill, except 3D printing workshops, which is held in Riga Technical University Design Factory. It's new some kind of entity in Azen Street. And then we have a monthly UI UX December meetup here in the middle also. Then we have drone kickoff meetup, meetup. Mobile application development kickoff meeting, first time ever, and I hope we will find out some enthusiastic people about it. So if you would like those, if you're interested in those topics, you could also welcome to join. And then we have at 18th of December Find Your Co-founder meetup, where we are looking for ideas for guys who are passionate about create something, but looking for the team members. And then last one we have a December CUDA meetup this month. And next month they're recurring, so you just check out the whole list. So what happened last couple of months? So I gradually get to know that Ethereum has been quite successful last 2 months. And as far as I know, they raised those. Released ethers, how you call those digital coins, and it was possible to buy it by Bitcoins, pre-released coins during 2 months, and they raised 15 million in cash in dollars. I mean, if you exchange Bitcoin core exchange rate dollar. So. What do you think about it? Any comments about this last transaction? It's first ever IPO done by Bitcoin startup, as far as I know. So do you think there's last time there's one guy who said that Ethereum seems like bubble or something like that, which will burst. So how do you feel about those guys? Any comments on that?
Well, from my point, technologically, well, they are advanced, but they're nothing really new, because selling, buying other than coin assets, it was doable in NXT platform, in other platforms also. So this is more a PR thing. Possibly this is a bubble, from my point.
Any other points?
Well, still, they should take credit for writing their own framework and client, because or the majority of other altcoins, it's basically they're ripped off either Bitcoin client or NXT client and some modifications written, but this is written from scratch basically. So well, this is from the point of security, this could be bad, but from the point of let's say the developer core team, it says something that they have a team to do this. So this isn't one or two developers.
Yeah, quite big actually.
Not just big, but qualified. Not every developer is qualified to write a C library for cryptography.
Yeah.
So that's my point.
But so they're a little bit behind the schedule to launch the project. I think
This is typical 21st century stuff. I think should be done yesterday.
Yeah. So, does anybody have some experience with the Ethereum clients? Does anybody bought them, or?
Well, I looked through some of the code they wrote, but I didn't actually bought it.
I found out that they don't have, for example, Ethereum client for Windows, as far as I know, because there's a kind of.
I don't care because I don't care about Windows.
Okay, but okay. So if I would like to buy Ethereum coins, so what should I really do? So there's a kind of digital wallets like Bitcoin.
They will most likely like the Monero coin. Yeah, they will release one in 2 weeks. I say. Yeah? So this shouldn't be a problem. It's usual stuff that first things first. Linux is Linux, Windows is secondary, and Mac is third, possibly second. I don't know. So this is no normal story. So this won't stay like this for long. For sure they will. Right.
So
right.
They have stable Linux wallets without any GUIs or other stuff.
Yeah. It's just
so
command
you
line.
need to write those command lines.
Yeah, but this, as I say, this will change. Even if they won't write a GUI. For example, how I use Bitcoin client. Yeah, I don't use the GUI. I use a daemon, but I don't type in transactions. Yeah, I have a web GUI. So I basically on top of it put a web GUI just for myself, yeah, and I use it. So maybe someone will take a Bitcoin, say web GUI, just modify the API a bit, and voila, it will work. This won't stay for long, so it's just temporary.
Okay, at least it is worth to follow up with those guys and see what will happen next.
I think what's interesting about Ethereum and their blockchain is completely different. So it's not just about transactions. You have to kind of shoehorn anything more complicated than a buy and a sell into the Bitcoin blockchain, where their blockchain has kind of a full Turing complete language that's kind of hosted by the people who are mining, and you can form sort of arbitrary instructions, and it makes it really easy to do contracts of
smart
contracts of sort of indefinite length that are executed automatically.
Yeah, but this leads to another problem. I don't know the distribution model and how exactly free is the API and what exactly can you access. How about DOSing the network? If it's completely free, maybe someone can screw around with the blockchain and just do denial of service. So this is really questionable. How I just didn't go deep into the development model, yeah. But if there are really no limits, the question is how they will. Just imagine if someone starts, let's say, injecting blockchains at insanely high rate, what will happen to the old clients?
I don't know, but I think that the point of the smart contracts is, I read a little bit as well in the code, apparently the currency is used to power the contract, so it literally gets destroyed or transferred to the miners. So if you write a program, in the blockchain that just performs like denial of service, basically it will work until you have run out of all your money, and then it will stop, and your money, your ether will give and distributed to the people who sort of helped you do this denial of service. That's the theory. I don't
know. I'm just biased against everything that isn't proof of work, yeah. Because there has to be some work done. There has to be investments in hardware. That's just my opinion, yeah. So, well, maybe CPUs and ASICs, it's too much wasted power, yeah. It's just think think about how much the whole Bitcoin network consumes power. It just heats the atmosphere. So yes, it may be an overkill, yeah? There are other ways. By the way, I just found a coin, just don't laugh. I think soon people will start mining with, I don't know, with power supplies, whatever. I found a coin that can be mined with hard drives. From the first view, it's an insane idea, yeah? But from the second view, if you think of it deeper, yeah, it wastes almost no power. So basically, your proof of work is your capacity. It's not proof of work, it's proof of capacity. You don't waste power. But you still have to invest into hardware, and you don't have to invest into some ASICs that can turn into scrapware in a day, say, yeah? You still invest in real hardware that can be used elsewhere, yeah? But you don't waste power. I'm just a proof of work guy. I've seen a lot of proof of stake coins that were launched badly, with lots of developers taking their big percent from the start, from the blocks, yeah? Then just flooding the market when the price rose, they just sold all the coins. So basically, it was a scam scheme, yeah. So I realize this is, for many people, this whole framework might offer lots of opportunities, yeah. But if you think deeper in it, there are drawbacks in proof of stake. Lots and lots of drawbacks.
And could anybody explain how smart contracts work and what is it? Anybody? So
well,
it's.
I mean, to explain, I'm not an expert, but what I just looked into this a little bit. But what my understanding is that, for example, you have a derivative contract, like what I'll talk about my approach to, which is totally different. But basically, you and I have a bet that the price of something will go up or down. If it goes up, I will make money. If it goes down, then you will make money, and I will have to pay you. You have something deposited to cover your gains or my gains. Both of us contribute, and then at some predetermined point of time, which is all written into the contract, and the access to the needed data to decide the contract is all written into the contract. The blockchain actually has access to that, and it will decide who gets the money and how much, and it will be paid automatically without any intervention from any third party.
It's scary.
But it's done by the same way that Bitcoin is. I mean, it's in a sense, because the miners are the ones who are performing calculations. In the case of Bitcoin, it's simply SHA-256 over and over again. But in the case of Ethereum, part of their proof of work and part of what they're actually doing is performing those calculations to execute the smart contracts on behalf of the users of the network. So that is also part of the work that they're doing, and they take part in that. And I think there is some small, much reduced sort of wasted work.
Yeah, but still there's what you mentioned. There is a trigger event of this. For example, you can't include it in say regular Bitcoin blockchain. This is the best thing about it. There's a trigger event built in the blockchain. For example, if you want some escrow or some service used with Bitcoin, you still have to use some guy. Yeah? There is an I don't know, maybe they already coded it, but there was an idea to make a single wallet, multiple clients with their own signatures. So the point is that you have a wallet with Bitcoins, but if you want to make a transaction, both guys have to sign the transaction. So 2 owners, 1 wallet. This works with escrows, but this doesn't work with some technical IT events. It won't trigger it. It still needs some guy to do this. So yeah, this is from one point, this is huge opportunity, but think of how many hosts can it have.
From this story, I think that the society is looking for something decentralized. I don't know why people like this solution to be decentralized, because centralization is working very good. There's some kind of central authority but okay, it seems that there's a demand in society for such decentralized services, and I saw this project is still growing, so just keep an eye on them. I think it's worth it. So second project is Apple Pay, and when it was released this keynote speech in September, I didn't know that it's somehow related to the Bitcoins, but after that there's a lot of industry press start running about Apple Pay's threat to Bitcoin or Apple Pay's gateway. So I just like to ask everybody here, so what do you think about it? Do you have an opinion on that, or have looked deeper into this technical issues, how Apple Pay is integrating or not integrating?
I don't know, did they release the code? Anyone?
Yeah, sure.
Yeah? Yeah. Forget about it. So, Apple just must die. Everything they do is just bad. If they didn't release the code, what's the whole point of this?
Okay, so what would be consequence for Bitcoin? No, or they try to kill Bitcoin? Or
They just route to your phone and just take everything you have. So what's the point?
Just another centralized currency.
It's another payment system.
But it could be used as gateway or something like that.
Maybe if people grow accustomed to paying with their phones for everything,
Yeah.
I think that's how the gateway drug is supposed to. What the great gateway drug is supposed to mean in this
I don't know.
context. So basically, if all the John normals start using their smartphones to pay for groceries, for drinks, for everything, then it will be a much smaller step for them to download a Bitcoin wallet and start using that, especially if the merchants they frequent already offer it, maybe with some discounts.
Yeah, well, knowing Apple, they can enforce some merchants around to actually use it and make it easy to use with nice UI, to smell like roses, look with funny buttons. So they can actually enforce it, but I don't know from the point of technology what's the whole point of this.
I think the bigger danger could be that Apple might be able to somehow enforce merchants to not accept Bitcoin. Because, for example, if Apple Pay goes mainstream, they can easily say, well, if you take Bitcoin, you can't use Apple Pay. And that means, could mean a potential huge revenue loss for some merchants.
I think that basically this Apple Pay is kind of like a debit card just in your phone, basically.
Yeah.
I mean, there is an error already in the second paragraph if you read the article. It says that it mixes digital currencies, virtual currencies, and electronic money, because Apple Pay is electronic money. It's postcard emulation or something, like really your money in the wallet, whereas Bitcoin is a virtual currency. It's not backed, it's not e-money in the European Union according to the legislation. So it's a completely different thing, and it's just assumed because there's a wallet for Apple Pay and a wallet for Bitcoins, it's something similar, but it's clearly someone wrote this without any understanding about the difference between virtual currencies and e-money.
Okay. I hope that Apple will not screw it up. There's Bitcoin, all kind of system somehow using its force. So the next slide is Bitcoin price. So we got still dropped down price for today is $365. It's dropped around $10 from last month, I think. And there's at last time the Coin Telegraph guys said that there's prediction that at the end of the year Bitcoin price will go up to 2,000. So what do you think? How do you feel about it? Any comments on price drop or?
Do you remember who told that? It was in the previous meeting, right?
Yep.
Yeah. Who told that?
They said industry experts. They have some kind of I don't know.
Yeah, well, but everything happened. Look at last year. The same November, December was like $100, and then bang, $1,000.
So we still have half a month to wait.
Yeah, just let's
buy some bitcoins.
Make our bets.
Yeah.
I would say it's likely to get up to 2,000 because, well, Bitcoin is becoming less than for speculation trading, but more like it's still mostly used for speculation. But currently, if you look at the trend, basically, and you use technical analysis for this graph, it's unlikely to hit 2000. So basically, it is going to be in a quite thin channel. So, and I would say that, well, it's my prediction that it is basically tied to the price of the oil and dollar. And dollar for currently is extremely, well, very high, and it beats all the records. It's around, currently it's close to multi-year high. And at the same time, oil price is multi-year low. So people mostly look like kind of alternative. Anyway, everybody who's using bitcoins, trying to align it to price of the dollar. Anyway.
So, by the way, in global economy, is there any signs what's going on in Russia with dropping down this rebel course? What's going on in terms of Bitcoin? Is there any
It's
news?
forbidden in Russia.
Simply
No, not yet.
It's not really forbidden.
But they're going to.
Yeah, same as in China.
They clarified something.
Because in Russia you have web money, which is big scheme. In China there's also Ali something money.
Yeah.
but
China Union pays.
But
Yeah,
they
so-
didn't ban it completely.
And these schemes are related to the government very closely, so clearly it's,
In China, they banned it only for banks and exchanges, so private still can use it. But in Russia, it's rather insane. They banned, at least they're going to ban everything. You can't even mine. I have friends from Russia that got their miners just turned around at customs and sent back to the manufacturers. So in Russia, it's complete ban. In China, it's not so. Chinese are still manufacturing ASICs. So I think at least half of China is mining. Yeah, well,
Mining is one thing, using bitcoins is a bit different. So on the government level, China is, well, trying to close Bitcoin completely. On the banking level, so many Bitcoin exchanges were just thrown away from China. And at that point, price of Bitcoin slid down by a couple of $100. So the only way the Bitcoin price could hike so at high level, it's full legalization in some Asia, big Asia country like China. It could be it could raise the price of Bitcoin, but not for a long time, I'd say.
Okay, going further, next part is the featured starter, and we at this moment have Latvian starter called Bitfurry. Did you know that those guys are from Latvia? No?
I think there is one guy from Latvia.
There's, I think, two founders, at least.
At least, yeah, I know that one of the
Yeah,
main guys.
this is this company, which is actually very recently have 25 million dollars venture capital round, and they're producing those ASIC machines, crazy stuff.
I think they are making those chips by themselves.
I actually had dealings with them. They are alive for like 3 years. They were on market when ASICs even were alive. They were making FPGA farms. And the guy that I was talking with, he was from Ukraine. I don't know, maybe some guys here from Latvia. But about chips, maybe they made the layout themselves. But the chips are manufactured in China.
No, manufactured, yes, I think, but
Yeah.
they
Develop the concept, company, and raise the money.
because everybody
Yeah,
produces chips in
but
Asia.
these guys are trustworthy for sure, because in ASIC market it's like a gamble, yeah? Half of companies are just bad.
And it requires a lot of procedures, a lot of paperwork to do it. But they also told that they have no problems that if any Bitcoin service or product is offered by non-bank. So it can be SIA
Limited company.
by company, corporate.
And they
So
don't
it can
ask
be
any registration.
No, so it's not required any registration, not license.
As far as I say.
Yes, to have ATM Bitcoin, but we also have received a letter from tax revenue service that their position is that Bitcoin is not a financial instrument, and this is a service or goods, whatever, and it should be taxable by VAT, value added tax, 21%, any transaction with it.
So, and they think that Bitcoin ATM is
The same as vending machine.
vending machine. So, no difference if you're vending drinks or cigarettes or Bitcoins.
Yeah, but
Same thing.
what about depositing?
Yeah.
This is funny.
Depositing where?
Bitcoins, depositing.
It's not deposit, it's
Yeah.
exchange.
If you're buying Bitcoin.
Yeah, but there are
It's not a
ATMs.
deposit.
There are
Deposit
ATMs
where?
to basically
Yeah.
you buy the Bitcoin, you just feed in the
It's
cash.
a purchase. It's not
He's
deposit.
talking about two-way ATMs.
Yeah.
No, it doesn't matter. In the vending machine, if you put some token and get back cola, or you put cola and get back tokens, it doesn't
You put
make a
money.
deposit.
If I put the cola back, I want the money back. So this
So
is
you are selling cola to this
to the ATM,
company.
yeah. Funny.
But at least there's a good sign that it's not forbidden. So the brave guys could try that see what will happen in first couple of months.
Individual
Now,
commerce
will
and
this ATM be in cash? Who will place the money inside?
Operator currently.
Not like G4S or someone.
Depends. If you have a vending machine, no one forces you to hire G4S. You can make
But
it
then,
yourself.
okay, but then how can I, if I wanna, buy Bitcoins, how can I be sure that this company has enough cash?
You cannot be sure. Just if you put coin in a vending machine, how can we be sure it gives you back cola?
So what's the business case if all the Bitcoins will have 21% tax on them? What's the business case? I see only overpriced Bitcoins there.
Yes.
Plus commission.
Now it's a bit stopped. I
course.
think it's
You barely noticed with the
some perspective, just public relations and advertisement of Bitcoin, like a souvenir,
Okay.
like some promotion of the idea. So
This is a
not a
really
big
killer
case.
factor. This VAT is a really killer factor for Bitcoin ATMs. It seems, at least now.
defeats the purpose. You can just exchange it at some electronic exchange and
Yes.
get the money. Yeah. If you're not laundering something, yeah. Otherwise, you will need to use the ATM, but it defeats the whole purpose with the VAT.
No.
But aren't they going to change it at some point, this VAT charge? Tax?
It depends on the recognition of Bitcoin as a financial instrument.
Uh-huh.
Bitcoin is not recognized as a financial instrument, then VAT.
Mhm.
It should be
Yeah,
first started traded on a regulated market,
Yeah.
then it can be accepted as a financial instrument. So some stock exchange should rate it, European Central Bank should rate it on the webpage, whatever. Then it can be accepted by the local regulators as a financial.
I mean, it's better than a ban, but it still isn't very good. It's just so much expensive.
But if they consider it a service, like selling Bitcoins, buying Bitcoins to an ATM, shouldn't they tax just the service, like the interest? For example, if I...
They consider it as commodity, as far as I understand.
How is the service? You're paying the whole amount, the whole
You're
amount
buying
is
a
indexed.
thing.
Yeah, okay. It's really odd.
But it's general in other countries as well. The
Yeah.
tax revenue services look at it in US as well. So
Heard, I think in Australia or somewhere they said, or in UK, they said that it is exempt from VAT. I can't remember the precise country.
Was it Finland?
Could be Finland.
Well, this we have some clearance.
Yeah.
Okay, I have one question. How are they planning to tax Bitcoin? For example, if you are a Bitcoin entrepreneur, do you have to give some report to them? Or what about
Of
Bitcoin
course,
transactions?
like a regular company, if you're providing service of whatever consultation, if you put in
We
bookkeeping,
will ask Artyom how he's dealing with
But
that.
how will they know the amount of tax you must pay? They have to know the
There must be a receipt.
Bitcoin,
There must be a receipt.
when each transaction is made, the price of Bitcoin when each
well, just
transaction
as
is made.
any other regular business.
I think the right guys we should be asking these questions, they are Baltic.
How they
As
dealing?
far as
Baltic are
we
getting
use,
only
this
euros.
We pay
They're using-
Just the proxy.
into
Yeah.
cash.
By the way, our local authorities are actually aware a bit about bitcoins. I had some encounter with them in customs. I had some hardware purchased from China for bitcoins, and they asked me, "How the hell did you buy it?" I showed them my whole bank account, and I proved them that I didn't actually pay any dollars for it. They were a bit shocked, and I said, "All right, guys, it's Bitcoin." Yeah. So they basically went to Bitstamp, checked the price, and
So that you convert the Bitcoin exchange rate on that date, or
yeah, well, I bought with bitcoins. It arrived like three weeks from it, and I was called to customs. Like a private, I had to declare the value, and I was declaring it in bitcoins, and they accepted it. It. Yeah. I showed them the blockchain. I printed out the blockchain.
you show blockchain to the customer?
I showed they actually they went to the whole paperwork, the printout from the blockchain, the printout from the Bitstamp with the daily exchange rate, and they calculated VAT for me. So
But didn't you have invoice with product value written on it?
what?
These are in bitcoins, yeah?
Yeah, I just bought it.
No, but Bitcoin is the way you pay, but product value is in dollars.
Yeah,
Invoice
but
is in dollars.
no. The point
Invoice
is.
wasn't Bitcoins.
The point is that the hardware manufacturer that I was buying
Yes.
from, they have fixed prices in bitcoins. They don't care about dollars. So it actually fluctuates a lot in dollar value. So I bought in bitcoins. It's a shady service. They don't care about. They just ship it and declare it as $1 because the package. Yeah, our customers looking what the hell $1 gift. Yeah, nice gift from China.
What was the value approximately? Tens or hundreds?
No, it's like something $800, something like that. Yeah.
Right. Fucking
Chinese are actually accepting. A lot of them are accepting. Just ask them. Yeah, if you want to buy something, just mail and ask. Do you accept? Yeah, sure, we do. Buy it.
Okay, thanks for changing. Okay, Jane, floor is yours. So
Thank you. So this is all like a really good introduction. Like I think some of the issues that I'm going to talk about, like we've already started to talk about them tonight, and this is the name of my company, at least for right now. What we want to do is make it possible to use bitcoins without risk of price fluctuation. So it plays right into what we're talking about. So what is it about regular fiat money that makes it useful as a medium of exchange? If you go to the store, you buy a pound of meat, it costs however many euros it costs, and if you go back next week, it's probably going to be around the same amount of money. And sure, dollar goes up, euro goes down, there's fluctuations like that, but the things that you buy the most in your local area don't change that much in price. And that's a feature, and it's a big problem with Bitcoin, right? As we talked about it, right now, even now, you can see we're over here at this end. We saw this is kind of the long-term chart of Bitcoin. It hasn't been very volatile recently, but it could change tomorrow, it can change any time, right? And even so, the volatility of Bitcoin is way more than regular currencies, even against themselves. So the question is, what if you could effectively make your Bitcoin risk look like this? Of course, the price was still going to change, but what you want to do, the goal is to be able to have a stable value of the Bitcoins you own and peg them to some local currency, be it dollars or euros or any other currency that you would choose.
okay? So I built an exchange that allows you to do this using derivatives. And essentially, if you own Bitcoins, you can think of it, you own the physical Bitcoins in your wallet, and you also have the risk associated with those Bitcoins. But you could hedge it, right? You can create a transaction where you sell that risk to someone who wants it. Maybe it's a trader, it's a speculator, some other person who wants that risk, and you do that through an exchange. And the service that I'm going to be offering is unique. There's obviously ways to hedge Bitcoins already. There are exchanges, there are even a few derivatives markets that are out there. But what's going to be unique about what I do is we can tie this to a wallet and we can monitor the contents of that wallet online using only public keys. And it requires a newer type of wallet. So I believe the specification is called BIP32. It's a deterministic wallet. So if you have a public key, you give it to the site. Can't spend any money off of it, but we can monitor the balance of it. And if new Bitcoins get deposited into that, automatically we can hedge them, sell them out, and replace the risk with the hedge. And the reverse is true as well. If you spend money out of that wallet, it essentially buys the hedge back. It reverses the hedge that's been done. And this can be done online and without any intervention from you as the owner of the Bitcoin. You just set up the public key on the website, and essentially the hedging can be done automatically for you. There we go. So I think what's interesting about Bitcoin is less the price speculation. It may seem unusual because I built an exchange to do speculation, but I think the most valuable thing about Bitcoin is actually the payment processing method that is attached to it, or that is part of it, right? So unlike a lot of other solutions that allow people to offload risk associated with Bitcoins, for example, in your cafe, you mentioned that you sell them directly to Coinbase immediately as soon as you get them. So what a solution like this would allow you to do, instead of selling the actual Bitcoins, you could maintain possession of the Bitcoins in a wallet and just hedge away the risk. So for merchants, that's kind of the angle that it would be useful for. Allowing you to keep all the easy aspects of being able to pay with Bitcoin, keeping possession of them, not having to put them into a bank, having to put the money into a bank account once Coinbase pays you, but also get rid of the volatility at the same time. And the way I've implemented the contract that's on my exchange, I've done this without using any fiat whatsoever. So I don't take deposits in dollars or euros, I don't pay out euros or dollars, only Bitcoin in, only Bitcoin out.
Yeah, but this raises the question, who actually provides leverage for you for hedging?
Who provides leverage?
Who provides leverage? You have to open an exactly opposite
That's right.
order on the market. So someone has to provide the leverage for it.
Well, the leverage is provided by the counterparty in the transaction.
So you're thinking of the counterpart. The whole your client base is going to hedge them. So they will all want to have fixed price. So who is the counterparty?
Who's providing the hedge?
Who's providing the hedge? Yeah.
So you're absolutely right. You have to have, for everyone who's selling risk, you have to have an equal and opposite buyer of risk, right? So initially, I will probably be hedging and wedging myself.
Yeah, this will be enough for some time, but
for a small amount, right?
Yeah.
And I can do that programmatically for the most part. I've built these types of systems before, but ultimately you want to be able to provide a deeper pool of liquidity and have people coming in and just trading there, right? Other clients. So essentially it's a two-sided thing. You have people who just want to hedge and want it to be really easy, and you have people who want to trade.
So you basically want to mix traders and guys that want to hedge. Yeah.
To put it in this way, I want to create a trading community and then use it to allow people to hedge. But the customer product that I highlight is the hedging part of it, because that's the thing that's brand new about this. No one's used an exchange for this purpose before, as far as I've been able to find. So just a couple of words about the business. I think Coinbase takes about 1%. I think they waive the first $1 million in fees or something, like some ridiculous amount. But I think their go-to number that they put out there is 1%. It's not a small number. They process $1 billion US worth of transactions annually. That's just Coinbase. There's other competitors in this space. It's not just people buying new armor for their elves on World of Warcraft. There's, you can buy fine wines and cheeses, and you can actually buy this. This is a real app. This is a picture from a real app. Somebody's selling a luxury automobile. I think it's a Mercedes. For Bitcoin.
It's just a private person who is selling.
This was from there was a special website where people were selling high value items but it's private people, but it's through this exchange or service that they verify that the person has it and has legal ownership of it and so on.
It means that you can buy it today, but you will not be able to buy it tomorrow. You cannot buy two of them.
No, it is a single item, that's right. Okay, so just an idea of how it works. I'll do this real quick, and then we can talk about some more of the details, and I'll give you a live demo of the site. But just to do, a quick overview of how it works. Like, let's say you have a buyer and a seller, and I know you guys in the back, the letters are pretty small, but I'll walk you through it. You got a buyer, and they want to buy risk. They want to get long Bitcoins. And so they buy 100 euros worth of Bitcoins at a price of 400 euro per Bitcoin. And the prices are a little out of date, but don't worry about that. The seller is on the other side, equal and opposite. And you think of them as hedging. So they have 100 euros worth of Bitcoins at that moment. They want to hedge them. They don't want to take any losses, but they're also not going to have any gains, right? So they sell those 100 euro worth of 100 euro contract. That is kind of like being short Bitcoin, but then they own Bitcoins on the other side of it. So it's equal and opposite. They're hedged. If the price of Bitcoin goes up, they will lose money on their hedge, but the coins that they have in their wallet will be worth more. So at the end of the day, they're still going to have 100 euro worth of Bitcoin at some other price, no matter what the price goes to. And the same if the price drops. They'll lose, if the price drops, their hedge will become worth more, but the coins they have in their wallet will be worth the same amount, but less. And we do this, so to answer your question about the leverage in a little bit more detail, you have to put some margin on the exchange. So if you have, if you want to buy 100 euro worth of Bitcoin, you have to put 20 euro worth of Bitcoin on the exchange. And if you lose more than 20 euro worth of Bitcoin, if you lose more than you've deposited, the exchange has to close out your position. And we may have maintenance margin requirements. It's very similar to sort of any futures market that's out there, but it does provide you with a large amount of leverage compared to other places that allow this sort of thing.
Without swaps.
Without swaps.
Yeah.
Well,
this is actually an advantage. Think of it.
Well, it is an advantage. I mean, my experience. I'll just put this up here as a transition. But, I dealt a lot with credit derivatives exchanges. That one in the lower right-hand corner, they used to be one of the biggest credit derivatives interdealer brokers in the New York and London market for bank risk. I was at JP Morgan Chase. I got an MBA from NYU, and I'm a Python developer, so that's my background. I'm kind of doing it all at this point. I'm actively looking for other developers and other people who, I need a designer. I need more members of the team that kind of share the vision of what I'm doing. So I just wanted to put that out there. But that's a little bit about my background. So this is a screenshot of what it looks like. Did I answer your question?
Yeah, well, you already answered my question.
Okay. Just wanted to make sure. So this is a screenshot, but I'm going to give you a live demo, so we're going to blow past that. And that's my information. I'm Jamie. I own a domain now. It's official. And so now, if you bear with me here, I'm going to pull up the live exchange. And what I really want to do here is zoom this in a bit. That good? You Everybody see that? Okay, so this is kind of the trader view of it, and this is still kind of in development for me, so you got some other looking things here and so forth that you do. But essentially, this is the trader interface to the point that you need to have a trading community. It's basically just a very simple trading API. You can use socket connection to interact with it, put in a price, put in a buy, it buys them. And you can see the margin over here. This is what I deposited. This is what is used by the open positions or orders that I have on the exchange. It updates that in real time. If you have an order, I think that one executed immediately so you don't see it. You've got, I'll put a couple of these in here. One. Put some small ones in there. And you can see the market reacts. There's your open orders. You can delete them, cancel them. It's all done over WebSockets. The underlying technology, I'm a Python developer, so I did everything in Python. The front end has some JavaScript. For those of you who are developer-oriented, use Knockout.js. Maybe you're familiar with it, but the website itself is just a simple Flask, single-page application. And the exchange itself kind of runs as a daemon in the background and creates the WebSocket connection. So the website and the exchange are actually separate and can be on separate servers. And I don't have a lot to show you in terms of the user interface for the hedging part yet. I need to get a designer to help me with that, and the underlying stuff for that is still in development. But this is basically the way it looks right now. So I'd be happy to have you guys give me some opinions about it. I didn't prepare a sheet for that, but you're also welcome to go to this website. This is a public website. I have a self-signed certificate, so if you go there and it says, danger, leave here, it's not secure, it is secure, I just didn't want to pay for an SSL certificate for my development machine, but I'll put some credentials up here, and you guys are, please don't deposit any Bitcoins. It will take your Bitcoins. That part of it works. You can go here. This is the address to the wallet that is associated with it. Oh, the wallet technology might be more interest actually to you guys, to this crowd. So I built the wallet with Electrum. It's an Electrum-based wallet. I did that because I didn't want to have a whole blockchain worth of data on my web server. It's 20 gigabytes. I have a $5 a month development server, which only has like 20 gigabytes on it. So,
yeah, but you still should have a separate server for the wallet. It's not secure to keep the web server and the wallet on the same machine.
It's a watching-only wallet.
Yeah,
so there's no public. The web server has no private keys. Cannot sign any transactions. So it's
no private keys, just public keys.
Just the public key. Just the public key to generate the addresses. So, for example,
Electrum has some AP too, right?
Sorry?
Electrum has some AP too, yeah? API.
API? Yeah, they do. And I actually wrote the version of Electrum that I use for this is actually not the current version. It's a development. It's like a bunch of commits ahead of what you download. Because I think the version that's out there right now that you install on your laptop doesn't use the new wallets, which this requires. Because I need a deterministic wallet so that I can generate addresses on the fly, and then I can also reproduce the wallet from anywhere, just given the initial public key. That you don't want to be able to you don't have to keep track of a bunch of addresses that you can't get back if you lose them somehow. So that's kind of essential for the web server. And the other thing I'll mention about it, that customers will have to also have that type of wallet. They'll have to have a deterministic wallet. So if you use Bitcoin,
what's the point to have the? So yeah.
Because I don't want to know. I don't want them to have to update me with all the addresses that they've used and generated. I want to be able to just keep track of everything that could possibly happen in their wallet so that I can hedge it. Otherwise, it would be very difficult, I think, to use. So let's see. There's no news. I do have a. Come on. always something. But yeah, so that, you know, you get API access. You can use sockets. There's also a REST API, and there's a live streaming API. So that's basically it. Any other questions?
So you're using Bootstrap?
Yeah.
Okay. So any question? Any developers who would like to join? Any designers?
Designers would be
Any
great.
designer,
Developers, Python, JavaScript.
so, and what is your target to build a startup for that?
What's my
Target? What is the goal to achieve? To create a company which is operate exchange, something like that.
Yeah. But it'll be a trading exchange, and with this hedging service on top of it. And you know, the long-term view is to create a way for casual users, more casual users of Bitcoin, to actually use Bitcoin, right?
Right.
Because my theory is that people don't use it. One of the big minuses of it is they don't want to have this risk. And if you're accepting Bitcoin as a business, for the most part, you're selling it out right away. So even if you had suppliers that you could pay in Bitcoin, you would have to you would sell your Bitcoin, and then whenever you had to pay the bills, you would buy them back. And so you know, basically transactions only go through the cycle once. People buy, they transact, and then they get sold again. Something like this that allows sort of anyone with a wallet to hedge and tie their Bitcoin holdings to a currency allows you to have multi-step transactions, and it allows a wider adoption of Bitcoin within the economy over time.
So if I wanted to, so if I had some Bitcoins and I was worried about price volatility when this product's finished, what exactly would I do?
So you would log on.
Deposit them?
No, well, you would have to make some deposit.
Yeah.
Right? So just for a figure, say 20% of the amount that you want to hedge, you would deposit that.
Yeah.
So if you had 1 Bitcoin you want to hedge, you deposit 2/10, and then you give the public key to the wallet, upload that onto the website, maybe select some options on how you want to do the hedging, and do your first transaction. It would hedge the whole 1 Bitcoin, the 8/10 that you kept and the 2/10 that you deposited, hedge the whole amount into probably euros, and then you go away and you don't worry about it. And you come back, and now the price is half of what it used to be, and the 80 Bitcoin cents that you kept are worth a lot less, but you have a bunch of other Bitcoins on the exchange waiting for you, which you can then withdraw. You can put them back in your wallet, or you can just leave them there, depending on what you want.
Okay, for the 0.8 Bitcoins that I hedged, if I hedged 1 called Bitcoin, I deposited 0.2 and I still keep my private keys for the 0.8, right?
Correct.
So what happens when I go on a shopping spree and start spending them?
So what would happen in that case, let's say you spent 2/10 of a Bitcoin out of the 8/10 that you kept.
Yeah.
The watching only wallet that we created on the website would see that transaction went out, and it would take away an equivalent portion of the hedge. So we would end up buying that part of the hedge back for you. So you know, you cross the bid-offer spread whenever you make a transaction. But you know, ideally, what we'll be able to do is provide a really tight market. And the reason why it's indexed. So this is interesting. Some other details about the way the contract actually works. The value. Who decides whether you've made or lost money? What the actual price of Bitcoin is. I actually use. I think it's CoinDesk. I think they have an API. So I pull in the worldwide sort of currency-weighted value of Bitcoin for a given second. I check like every 3 seconds. And it marks everyone's positions against that average. So you don't have exposure to the Bitstamp price of Bitcoin versus the other one. It's basically a weighted average of all the exchanges in the world in that currency.
Have you ever heard of Coinapult? Coinapult. I think they offer something very not the same thing, but quite similar. They also have things to avoid volatility, so that you lock your bitcoins in euros or dollars or yen or whatever.
It's the same, but
Well, they don't do just that. They also do.
the idea is the same, but the biggest difference is that you are going to use your own client to trade for it. Because the other similar idea that I saw some on Bitcoin Talk, they all use different exchange APIs. They just open the hedging order on the other exchange, which is risky because, well, all right, Bitstamp is alive today. MTGOX was alive too a year ago, yeah. So, which is risky. But if you provide all-in-one service, yeah, this is. I think this looks less risky.
Yeah, but it's still risky. It's still a centralized service.
Yes,
he could disappear with all the money.
But no, or what all the money?
Of the money.
Just think what you what you are losing. You still have your bitcoins on the wallet.
That's good.
You will lose the hedging and you will lose your margin, yeah, to deposit. You still have the money. The others don't do that.
Do you have to deposit all your bitcoins to do the hedge with that?
Yeah, well, the ideas that I saw, I didn't see any. I just saw some code and ideas. I didn't see any ready-to-use project. They all required the Bitcoin daemon, the Satoshi one, yeah.
Mm-hmm.
They all required depositing, and after that, they actually used another exchange.
Yep. And CoinAnchor or Coinbase actually does that. They don't have their own exchange.
Yeah.
They do some internal matching, I think, but for the most part, they're piping in liquidity from other sources.
How do you plan on? What do you plan, or what does the algorithm plan to do when, for example, the price falls dramatically or rises dramatically and the margins for the risk takers run out?
Yeah, so it's a good question. So if you get to a point where you've sustained losses on your hedge in either direction, either plus or minus, if you don't have enough margin to cover the losses, obviously your position has to be closed. So you lose your hedge or you lose your position, whether it's speculation or hedging, whichever it is. If the losses get to a certain point, and I think and this is pretty standard for the way futures exchanges work. You have some initial margin, say that's your 20%, and if you lose more than, I think it's like half of that, then before you get to anything, before you lose any more, they close out the position. And the way I've written the code is that it will essentially, trigger that automatically. So the exchange triggers that. It matches first against, there's actually three steps that it takes. First thing it does is cancel all your orders. So if you put an order on the exchange, you already have to put margin for that, right? Just to have an open order, even before it's filled. And there's some technical reasons why that has to be, because otherwise you could just put a zillion orders and then maybe a bunch of them get filled at once and you're instantly over your margin limit. So you have to take margin when you place an order. If you place too many orders, it's going to stop you. So the first thing you do is you cancel all the orders. If that doesn't solve the problem, then it goes in and tries to buy back the positions or sell out the positions that you have. The first thing it does is it looks for available liquidity in the market. If it doesn't find any, then it has to forcibly liquidate some other random counterparty. So it essentially looks for, if you have to sell, it looks for someone who, if you have to sell, look for someone else who can buy, so someone else who's short and would need to buy back a position in order to close out. It finds them and it liquidates them forcibly liquidates their position as well as yours. And it does it at a price that completely wipes out your margin. So if that's the worst case scenario, right?
Yeah, but this is because let's say the relative margin call is shorter than if you would have the whole wallet.
Yes, it's limited to the deposit.
If you would have the whole deposit, yeah, then in case of some insane liquidity, yeah, it could survive. But this way, just the margin.
The most you can lose, because I don't have keys for anything else.
So it's to two-edged sword.
And at that point, then it's my risk if I don't do it right, because if you lose more than what you've deposited, you know.
Actually,
Actually, I lose for you, you know, because someone else has made that money. They will expect it from me.
Yeah, but so basically, if I would want to use that service to kind of escape from volatility, then it's, well, I, for example, want to safeguard my one Bitcoin for volatility. I have it at, right now, the price is 300 euros per Bitcoin. Well, next morning I wake up and the price is 50 euros. And, probably there weren't enough risk takers on the other side to cover it all. So still, I will probably have less Bitcoins than for 300 euros. If I'm not talking about the risk taker side, I'm talking about the guy who just wants to use Bitcoin without worrying about volatility. So it doesn't fully address the problem.
Well,
it's still basically margin trading, just from two separate sides, you know?
It's definitely margin trading. So if in your scenario, if the price went to 300
to let's say
50 overnight,
yeah,
what would happen in the course of that movement is that you would be making a lot of money, you know, a lot of Bitcoin, and simultaneously the people who were long would be losing those. And if there wasn't enough margin on the exchange to cover that,
you will win actually a bit. He will lose on the exchange, the order on exchange, yeah? It will eat up the whole margin that he did leave on exchange. But his coins that are in his wallet, they actually risen.
No, he's talking about the price going down. So the coins that are in his wallet, he's losing money on those. And his question is that if someone else lost so much money that their positions had to be liquidated, and I randomly picked your account to forcibly liquidate them against, because there was no other availability in the market, then I've forcibly taken away some of your hedge without like telling you about it. And so now you're not fully hedged anymore. And I guess my answer to that is that there's most likely going to be two different types of accounts on the system. So as a hedger, if you're utilizing the service, you have a wallet that's being watched, you would be selected last for forced liquidations. So that's one part of the answer, right? So the speculators are the ones who are going to ostensibly have bigger positions and be monitoring their wallets and watching their positions more closely. They're the category of people that would be less likely to just leave a position for a long period of time. They're more expected that they would be better targets for forced liquidation. Right now, the algorithm looks for the biggest positions, because under the theory that if you have a big position, if I take a little bit of it, it hurts you less as a percentage of your overall wallet. There's no great way to do it, right?
Yeah, I see.
Any questions? Any more questions? Okay, thank you, Daniel. Hope you will succeed with this exciting Bitcoin project. And I hope you will turn this idea into a startup, which actually is very, very valuable for this community ecosystem. Grows up just not only consumers of Bitcoin, but developers and entrepreneurs. Okay, now Artyom, the floor is yours. So you get more presentation. So just freely.
Yeah, I will just
tell your story, how you decided.
Sorry, I didn't prepare this.
Yeah, it's okay.
Since I have time. So as far as I know, I'm running a bar in Riga, so which is accepting Bitcoin since 1 month and a half. So basically, the turnover of Bitcoin is just less than 0.5%, which is not much. So it's just like an experiment for me. So, but now we have passed the taxation period, which is 1 month. And my bookkeeper advised me to keep Bitcoin as just like not to keep to track Bitcoins as cards for the credit cards. So for example, if I'm accepting, okay, first of all, I will start the technology, how we work. We are working with Coinbase. So basically, whenever somebody comes to our club and want to have a drink, he pays to us through Coinbase. Yeah, for example, one drink is 10 euros. So he gives us like, I don't know, 0.05 Bitcoin. It immediately goes to Coinbase, and Coinbase every day transfers us euros. So this is how it goes. So from bookkeeping perspective, it's the same as bank account. Coinbase is a bank account. So this is how it is working. But I think maybe, because here I heard that Bitcoin is a service, it's like commodity. It's like basically when you buy Bitcoin, you have to pay VAT.
Yeah,
Some kind of this. So maybe if my turnover of Bitcoin will go much bigger, then I might be attract some interest from tax authority.
okay.
So this is it. Yeah, I would like to also to hear like the story from Bitcoin, from Air Baltic people, how they deal with it.
I have read that, yeah, they also do it. They get only euros and they...
Yeah, so they transfer, like they convert Bitcoin straight away to euros. So they have no risk. Like this, the changes of prices is really risky for them.
Question: did you always instantly sell through Coinbase bitcoins for euros? Because I think I recall some news story back when you started accepting that you didn't, that you actually kept the bitcoins, or was it a mistake in the story?
No, I actually done automatically by Coinbase.
Yeah, but you can probably choose.
Yeah, you can choose.
Yeah, so it was probably a mistake in the news article, right?
Maybe.
Okay.
So I'm trying not to keep Bitcoin because it's risky, and at the same time it's also like more transparent for bookkeeper. You see straight away how much money we got.
So, what about cash register in the last time?
Yeah, before I have an old-fashioned cash register, which had just two methods of payment, like cash and cards. So I couldn't like program the button which accepts the Bitcoin. Now I have upgraded my cash register, and now we have like button Bitcoin. So for example, we accept 10 euros and we click Bitcoin. So when you get the receipt, you see that you have paid 10 euros in Bitcoin.
So that you no longer have the handwritten.
No, we don't have it anymore.
It's quite funny.
So in my receipt there's bitcoins?
No, it's like amount in euros, but it
And?
says that you have paid with Bitcoin. 10 euros with Bitcoin.
Okay.
It's like you are getting the receipt. When you pay with card, you also have the sum like 10 euros, but it's shown that you paid with card.
Oh, but there's no Bitcoin amount on the chain.
No, there is not like exchange rate now.
Exchange, yeah.
It's like stick.
And you put the VAT on top, like it's included in the
Yes,
receipt.
exactly. So I'm paying VAT out of this Bitcoin, out of these 10 euros.
Are there many people paying in Bitcoin?
No, very few. Just like maybe for the 1 month and a half, it was like 15 people.
Are there tourists or local?
Mixed. Yeah, local and tourists. But there was no such big like interest from people about Bitcoin.
So now, how this Bitcoin payment process is organized in details? If I would like to buy a beer, so what should I do?
First of all, you have to have Bitcoin.
How?
How? you can mine.
No, I mean, how I bring it to the cafe? What should I have in?
Okay, I know just one way, Bitcoin. So you can deposit your money to Coinbase. So
You don't actually need to do that. Well, I've been to your bar several times, bought drinks and everything. And basically you just use a mobile wallet. They show you on their Coinbase app, on a smartphone, they show the QR code with the amount encoded in it.
Before that you need have Coinbase
But you have
No,
a
you
wallet.
don't need Coinbase. You need any Bitcoin wallet at all.
But you need one on your mobile phone that can scan the QR
Well,
code.
preferably, yeah. I think you could probably type the address
No,
in
you
your
can
laptop.
actually
but-
print out somewhere, let's say home, print out the QR code and check and just show the check to the you can do it without. I'm not saying about keeping the private key in your head. It's like an insanely bad idea. I'm telling you, you don't actually have to show it on the smartphone. I think you can print it out somewhere if you're coming to. So you just know how much you're gonna drink tonight. Yeah, you just make a separate wallet, print out the check.
Wait a
just-
second, I should print
yeah.
the QR code, not you. I am printing out the QR code.
Ah, you are.
Yeah, and you are reading it.
Yeah.
So you get the address, you transfer the money to Coinbase, and Coinbase ping me and says money is here. So you can give the code. This is how it works.
So those 15 or 30 clients monthly, what platform or wallet they preferably use for?
You know, this I'm not a bartender, so
Okay,
I don't really
but-
see,
but-
and they don't show me their mobile because they just scan the QR code.
Okay, and then from this point of view, what kind of interface bartender have? They have mobile.
They have just mobile phone,
mobile
Coinbase
phone with
application.
Bitcoin.
Yeah.
With this Coinbase.
With Coinbase, yeah, and they say they didn't call. Basically, it means that money is arriving.
So what bartender is doing when he would like to sell a drink? He's open app.
Yes.
Right,
Shows to the client.
He's writing some kind of value or
Just the sum, yeah, the value.
So the value, the price is fixed for a year, let's
Yeah.
say.
Okay.
But the price of Bitcoin fluctuates, so you get different
Why
euros.
the price in euros? Yeah.
Yeah,
So
the-
you're
it's
not
priced
sure
in
how
euros.
much will you get.
It's priced in euros, not in Bitcoin.
Yeah, it's priced in
Okay.
euros.
It's so you change the price of beer in Bitcoins
Yes.
along the exchange rate.
It's always different. But
Coinbase does it automatically.
Okay.
You input in the mentioned
the
app, you
euro,
input.
okay.
yeah,
You input
Coinbase
euros.
is doing the old
Okay.
jobs.
in the Coinbase app is generating QR code.
Yeah, it generates a QR code, the sum is encoded in it, and you
bartender is showing you a code.
Yeah, exactly. It's showing you a QR code, you scan it,
Okay,
broadcast the
so
transaction.
At least
it
I
turns
should have
green.
smartphone.
Yeah,
In the bar.
you should.
Okay, I scan this code and then go to my mobile wallet and transfer money.
Usually you scan it from your mobile wallet.
Yeah. Yeah.
In this case, you got one smartphone scanning another smartphone.
Exactly, yeah.
So they-
It's a really smooth experience.
The app that the Coinbase provides you and the bartenders with, is there a special one that is suitable for you to give to your employees that would not, for example, allow them to make some different changes on your account
They
or
just
withdraw money and so on?
this application just accepts money.
So it's a special one for you to give to your employees.
Yes.
What about the markup? I mean, the Coinbase probably takes a kind of markup on the transaction. Do you add it to the value of the beer?
No,
or-
actually, from what I see, Coinbase is for free, at least for now. I heard that you say that it's up to 1 million, yeah? It's for
They
free.
have some ridiculous amount that they basically waive fees for, but on paper their fees are 1%. But I don't know how many people.
Because
are
I
getting
didn't
more
see
than
any
that.
fees until now.
Yeah.
Maybe
I
they
don't.
take the fees from the customer, but not from me.
No, unless you have
Okay.
a really big bar and selling lots of beers for Bitcoin. Probably not gonna
Yeah,
get
actually, yeah, it looks like it's for free because I'm taking from customer to use, and then to use I have in my bank account. No manuals.
And I don't know how they make money because they don't have their own exchange. They don't charge the user anything,
Yeah.
and they don't charge you anything, and they pipe in their liquidity from other places.
They have spreads.
They
When you
have a
buy-
good offer spread, but I think very few times are the buyers actually from, does it happen that a person wants to sell at the exact same time that a Coinbase user is also wanting to buy?
No, they don't do it like that. They do it through another exchange. I think it's actually Bitstamp. I'm not sure, but
You can
if I remember,
euros.
yeah, exactly. Many people buy their bitcoins using Coinbase, and they have their spread on top of
Yeah,
Bitstamp
They
price.
charge you as a user if you want to buy Bitcoin.
Yeah,
Or sell them.
yeah.
But as a business to convert them, I think they waive those fees.
Probably, as you said, probably up to some amount.
Yeah.
Ridiculous for us, probably not as ridiculous for
I mean,
some other countries.
think of it this way: any party that has a lot of liquidity, and Coinbase has a lot of liquidity, basically for free, they can arbitrage very easily. They can win on arbitrage. They will lag your phone for, I don't know, 15 seconds, yeah? And this time they can basically hedge and win. So they have lots of liquidity for free. They offer them clients, but they can, let's say, win with time. Arbitrage is...
One more thing, yeah. Coinbase transfer money only at midnight, you know, so this is also interesting thing. So for example, if I'm accepting Bitcoin at noon, yeah, so 12 hours they are staying as Bitcoin, and only then I'm getting them as euros. But it's always the same amount, so they are hedging this. So
Wait, so they hedge your entire Bitcoin balance at
Yes.
one time at midnight?
yes.
Oh man,
I'm telling
that's
you.
how they make money.
Of course, because when you deal with fiat, yeah, all the banks are interconnected. Arbitraging is basically impossible. The lag is very small. When you're trading, you use the lag is minimal. It's like milliseconds. You have.
But this is like an auction, like you have a huge order, all the
Yeah,
people who are
yeah,
selling
yeah.
Bitcoin. If they hedge those out during the whole 24-hour period, they make money on it, and then they get lifted on the offer side at midnight for however many Bitcoins.
Yeah, but
I mean,
for
that
example, if the price of Bitcoin will go down or will rise suddenly, so they will still have to. Oh, wait a second, how it is moving. Okay, never mind.
Well, it isn't. in any way, it isn't a charity. Trust me.
I believe you, but I think it's also kind of demo version right now. So they just attract new customers like me, like you. So and then after maybe they will switch on some.
Since they for ordinary users, Coinbase in Europe now have some 500 euros limit or something like that. You can
Maybe I still didn't
more
mention.
than 500 if you have wallet in Coinbase in Europe because it's better officially.
I think it was when you were buying on Coinbase.
Yeah, yeah.